What's going on, team? It's Caddy with Money Vesting. I hope that you all are having an amazing day. In this video, I will break down 3 leveraged ETFs that I'm going to be watching very closely next week and the reasons why these are on my watch list in the first place. Now, before we get started, if you guys enjoy the video, please make sure to give this video a thumbs up. It really helps out with the YouTube algorithm and recommends this video to other people who might be interested in watching. Also, subscribe and hit that notification bell so you don't miss out on any future videos related to the stock market, investing, and technical analysis. So the first ETF that we are talking about today is going to be ticker symbol UPRO, and that's the ticker symbol for this leveraged ETF. And the fact that this is leveraged 3 times, it's essentially designed to provide us with a 3 times the daily return for the underlying market benchmark, which in this case is going to be the S&P 500 index. So you guys can see that this right here is the S&P 500 index, ticker symbol SPY, and it was up about 1.2% on that day. So UPRO, since it's levered 3 times, it was up over 3.65%. So it's designed to track the S&P, which is the underlying index, on a 3 times daily return basis. Now, I do want to mention that leveraged ETFs come with a lot of risk associated with them due to the fact that they have what's called a volatility decay. And that essentially means that they are only designed to be held very short term and to be traded, not to be invested long term. Because of the fact that they are tracking the daily return on the underlying index, they will not provide you with a 3 times return over a weekly, monthly, or yearly basis because of the fact that they rebalance at the end of every single day. And they're designed based on all these different swaps and contracts, which again rebalance every single day at the end. So to give you guys a simple example and to put things in perspective, we're looking at the S&P 500 right here, and back in February of this year, it dropped close to about 35 to 36% with everything that is going on. The market took a hit, but since then, it's done an incredible job pushing up close to 46% and reaching near all-time highs. Right? So it was only 5% away from reaching all-time highs, whereas UPRO, since it's leveraged ETF, that drop for this ETF was close to about 80%. And since then, it's gone up over 200%. So you can see how the gains and the losses are so amplified for this leveraged ETF and the other 2 that I'm going to share. So the volatility decay comes into play when the S&P is almost near all-time highs, but the leveraged ETF, which is tracking the underlying index, is nowhere near to its all-time highs when it was trading at around $80 a share. And right now, it's still almost halfway through its pre-COVID levels. So that's what volatility decay means. And to put things even more in perspective, let's say you make an investment of $100 and you lose 50% of that $100 investment, and now you have $50 left. So if you gained another 50%, your mind will trick you to think that you're back to the same level as you were before. But in reality, you gained that 50% on the $50 that you had left over, meaning that you only gained another $25. Bringing your total to $75 and not the $100 that was originally invested. So for you to go back to break even, you would essentially need to gain 100%, meaning you need to double your money in order for you to break even. And that is, in a nutshell, what the leveraged ETFs means. So if you were holding UPRO in February of 2020 and you had to weather this storm close to about 77 to 80%, even after this stock market rally where the S&P has gone up 47% and UPRO has gone up 200%, you would still not be able to break even on your investment because you need to go up close to 350% in order for UPR to go back to the same level as it was before the crash. So I hope that makes sense for you, and which is why I want you guys to understand that these instruments and leveraged ETFs are designed more so to be traded on a day-to-day basis because they give you that opportunity intraday as opposed to the weekly or the monthly rebalancing. So that's going to be the first ETF that I'm going to be looking at very closely because we know that there's a lot of uncertainty and a lot of volatility in the markets, which is going to essentially send S&P either up or down quite a lot, resulting in UPRO also going up or down quite a bit since it's levered 3 times. Now, I want to quickly go over the holdings under this ETF, and it's going to be some of those blue chip stocks that we already are familiar with. Companies like Microsoft, Apple, Facebook, Amazon, stocks like these that are included in the S&P. So if they're doing well, the S&P is doing well, which in result means UPRO is going to do well. All right, guys, so here we are inside ProShares official website, and you guys can see that index holdings information as of March 31st, 2020. Microsoft is leading the way with about 5.62% in weight. Apple is just under 5%, Amazon 3.79%, Facebook, Berkshire Hathaway, Google, Johnson & Johnson, JP Morgan, and Visa are some of the companies that are included in the S&P 500 index, which is what UPRO is designed to track on a day-to-day basis on a leveraged 3 times basis. So the next ETF that we're going to talk about, and the one that I'm going to closely be watching, is going to be FAS. Again, this is a leveraged ETF that is levered 3 times. I want you guys to be incredibly careful when you are looking into these ETFs because of the risks that I've already mentioned. And there's one more piece of information that I want to include, and that is the acceleration price. So all these leveraged ETFs in their prospectus have what's called an acceleration price. So to give you guys an example, we saw ticker symbol UWT, which is a crude oil leveraged ETF issued by Citigroup, trigger that acceleration price and essentially getting delisted because of the fact that it fell in value so significantly. And in the prospectus, it essentially says if that ETF falls to a certain amount, the issuer can delist and retire the note. So that's something that I want you guys to understand because, again, there's so much volatility in the markets and there's so much uncertainty. The best thing you guys can do is be selective on what you choose to trade or invest in and never trade based on other people's opinion or analysis. Always do your own research and your own analysis when it comes to investing in the stock market. And that's something that I will preach every single day because there is a lot of risks involved with these leveraged ETF. So you guys can see that back in February, it was at all-time highs of $107. And since then, it fell close to about $84, going all the way down to $14 a share. And since then, it has recovered, going up 221%. So you can see how much amplified these leveraged ETFs are. And this right here is going to be tracking the financials sector more specifically. So it's tracking all the banks, all the big banks, and I will go over all the holdings that these ETFs have in just a minute. But to differentiate the FAS ETF with UPRO, UPRO is essentially tracking the overall market benchmark, the S&P 500. FAS is designed more so to track the financial services index. Now, the third ETF that I'm going to be personally watching very closely is going to be TECL. It's right here. And again, it's the same story. It is levered 3 times. So it's tracking an underlying benchmark to give us a 3 times daily return. So it's more so in the technology sector. So again, it has companies like Amazon, Apple, Facebook, Microsoft, and it's specifically designed to track all the tech companies. From its March lows, it has gone up over 230%, going all the way to $200 a share. So I want to re-emphasize on the point that these leveraged ETFs are risky. They're designed to hedge your positions on a very short-term basis. They're not designed to be held long-term. So I hope you guys understand the risks associated with it. So that being said, now let's jump over to FAS's holding and I will show you guys what the fund currently has. All right, guys, so here we are inside ETFDB.com. And you guys can see that we are looking at ticker symbol FAS, and that is a financial bull 3 times leveraged ETF. And the current top 15 holdings are going to be Berkshire Hathaway, Visa, JP Morgan, MasterCard, Bank of America, PayPal, American Tower, Citigroup, Wells Fargo, Fidelity, S&P Global, BlackRock, so on and so forth. So these are all the banks and all the financial services company that this fund currently has. And again, gives you that 3 times leverage intraday for you to take advantage of those opportunities when they present themselves. So to give you guys a complete recap, the 3 leveraged ETFs that I'm going to be personally watching very closely next week are going to be UPRO. The underlying benchmark is the overall S&P 500 index. TECL, which is again a 3 times leveraged ETF, and the underlying benchmark is going to be the S&P 500 technology sector specifically, and then FAS, which is again a 3 times leveraged ETF that tracks the financial services sector and has all these different banks and financial services companies in the fund. I hope you guys enjoyed this video, and if you did, please make sure to give this video a thumbs up. Subscribe to the channel if you haven't already. I really do appreciate you guys' support. As always, make sure that you do your own research and your own analysis when it comes to investing in the stock market. All I wanted to do is share these 3 leveraged ETFs that I'm going to be watching, what my plan is going to be, and if I'm going to personally be trading them. Always understand the risks associated with whatever you're trading. Be very selective in the market environment we're in. And I hope you guys have a green day, green week, and a green month. As always, happy investing, and I will see you guys in the next video.